Welcome to museums.com. For centuries, collectors have bought art not only out of passion, but also with the hope that it will grow in value. From Renaissance patrons to modern billionaires, art has always been more than beauty. It's been a form of power, identity, and investment. But in today's world of stock, real estate, and cryptocurrencies, where does art actually fit? Can a painting or a sculpture truly compete with property or tech shares? Or is it simply a beauty gamble? Today, we will explore whether art is a smart investment, how it compares to other assets, and what risks and rewards come with putting your money and your heart into art. Let's start with real estate. Buying property is often seen as one of the safest long-term investments. It usually generates rental income, appreciates over time, and provides something tangible: a home, a building, or land. Art, on the other hand, doesn't generate passive income. A painting hanging in your living room won't send you a monthly check. Its value is determined by perception, by demand, cultural relevance, and the reputation of the artist. But unlike real estate, art is incredibly portable. You can move it, ship it, even store it in a tax-free facility known as a free port. In fact, many collectors keep their most valued works in this highly secure storage center in places like Switzerland or Singapore. For them, art is not just decoration, it's part of a global wealth management strategy. Another difference, art is emotional. It can elevate your home, inspire conversation, or represent your values. A house might rise in price, but a great painting can make your life richer every single day you see it. Now, let's compare art with the stock market. Stocks are liquid and transparent. You can check their value in seconds and buy or sell with a click. The art market is the opposite. It's opaque, slow-moving, and influenced by taste, reputation, and sometimes poor hype. Yet, despite that unpredictability, certain artworks have outperformed stocks. Blue-chip artists like Picasso, Warhol, Monet, or Basquiat have seen constant appreciation over decades. A Basquiat painting that sold for $19,000 in the 1980s later resold for over $110 million. That said, the art market is not uniform. For every artist that skyrockets, thousands remain stagnant or lose value. And unlike stocks, there is no dividends, quarterly reports, or easy resale market. Collector needs passion, expertise, and a good eye or a good advisor to succeed. Still, for some investors, art feels safer during economic downturns when currencies weaken or market crash. Tangible assets like gold and art can feel like cultural anchors of stability. Then there is the new frontier, crypto. Like art, cryptocurrencies are speculative. Prices rise and fall dramatically, and trends move fast. But the biggest difference is meaning. When crypto crashes, all you are left with is a line code. When art prices drop, the painting is still existing. It still carries beauty, history, and emotional value. That's what gives art its emotional safety net. A masterpiece doesn't vanish because the market dips. It continues to matter, to inspire, to provoke, to represent something timeless. Interestingly, the two worlds are starting to merge. Digital artists have entered the NFT space, creating blockchain-based work that can sell for millions. It's reshaping how we think about ownership and authenticity in the digital era. Of course, our investment is not all glamour and profit. It's full of risk. Prices are subjective. There is no fixed formula to determine what a painting is worth. Liquidity is limited. Selling can take months or years, and the costs are high. Galleries and auction houses can take commission up to 25%. Then there is a maintenance, insurance, shipping, climate control, restoration, all of which can eat into profits. And if a work turns out to be inauthentic, damaged, or poorly documented, it can lose its entire value overnight. In short, art is not a quick flip. It's a long game, but here is the other side. Art offers sometimes no stock or property even can, emotional return. You get to live with it, connect with it, and share it. It becomes part of your identity, part of your story. Financially, art can also diversify a portfolio. It doesn't always move with the broader economy. It can be used for tax optimization, passed down as part of a legacy, or even donate to museums for major deductions. And for many collectors, it's about more than money. It's about supporting artists, preserving culture, and participating in a centuries-old ecosystem that likes beauty, intellect, and capital. So, is art a good investment? The answer depends on what you expect. If you want fast liquidity and predictable growth, you might be disappointed. But if you see art as a cultural, emotional asset, something that enriches your life while potentially gaining value over time, then yes, it can be one of the most rewarding investments of all. Art doesn't just decorate your walls, it tells you the story, reflects your time, and connects you to something much larger than yourself. Subscribe to museums.com to keep exploring the fascinating crossroads of culture, history, and finance, and uncover how the art world truly works. See you next time!